Hello, traders. This is Dollar Will with an update on the performance of the U.S. dollar as it relates to gold. We're going to be looking at the dollar franc, that's USD slash CHF on one chart. Then we're going to look at gold versus U.S. dollar. That symbol is XAU slash USD. Last time I discussed the dollar, it was the 19th. It was Friday. We were looking at Friday, and I pointed out that when it closes positive, that's not, I said at the time, it doesn't really guarantee that we're going higher, but it does show that something's going on, that there is some confidence in the market, in the instrument. Well, that confidence proved to be false as the dollar fell to a new low. I still believe I was holding firm on my position that we are about to head higher on the dollar. What I have here is in this diagonal line here is a former price resistance. The downturn for the dollar ran up starting in 2011, and it hit its high in December of 2016. So maybe that's what 13 months ago. Okay, so the downtrend that we're in right now is still part of the trend that started in December of 2016, 13 months ago. And we'll see what happens as we go forward this week. We still didn't break out of the channel for gold, but so we're still kind of in a holding pattern. So keep your eye on dollar franc, dollar gold. Keep a peek on oil, and just for your own awareness, pay attention to how your Bitcoin currencies respond when the dollar turns. I feel pretty certain about this. We'll see though, because the dollar cannot keep trudging along in this oversold state. Okay, so there's that. Let's see. I want to take a look at it on a longer time frame. You know how I do. I like to get rid of some of these squiggles by looking at longer views. Okay, so I'm going to try. Let me see what I got on the 4 hour chart. Pretty much the same thing. What we see even on the 4 day chart. On the 4 day chart, we are oversold. So the dollar is severely oversold. Now prices can only go up, down, or sideways. And when the price falls like a knife like this, that kind of lets you know. And we're near the end. It can't, it can't keep falling at these extreme levels for long. It's actually a good thing when prices dive like this. I like it because it means that we're gonna hurry up and get it over with. Just let the blood spill. Get all the hand wringing out of the way. Get the scared money out of the market. And when I get to my Fibonacci levels that I'm looking for, my supports that I'm looking for. The next thing I'm going to be looking for the dollar is a candlestick on the daily chart. Let's see. I'm going to be looking for a candlestick that's greater than these. That's going to break above a moving average I have, or if you can just put in a trend line here. So I'm looking for a strong candlestick. Now, you volume chart watchers, you'll see that show up on the volume chart. So that's what I'm looking for. I'm looking for what we call a bullish engulfing candlestick. That's a candlestick where the body of the green candlestick to come is greater than these are bars we're looking at now. I need to stop going calling bars candlesticks, but I kind of know the candlestick in my mind. So even when I'm looking at a bar, I'll call it a candlestick, but just for instruction purposes, that's a candlestick. So I'm looking for a green candlestick that's going to be where the body of the candlestick is going to be bigger than this one. A bold move, and that green candlestick is going to show that the buying power going north is greater, at least with regard to the new candlestick and the previous one. You want the buying power to overwhelm the selling power, and if you can, if you see that and you break a trend line and you were in a deeply over sold state and you're near a resistance, it's, the cumulative of all those things. I will feel good about taking a position in this, but I believe that the gold run is coming near an end. Let's see. And then remember, I don't know if you heard me on the BGS Hangout. I mentioned that when runs end, they usually end. I'm not gonna be as graphic in explaining it as I was on that show, but it usually ends with a big pop or big bang. And seeing this destruction of the dollar in basically one day, that's usually how trends end. And as a side note, I'm paying attention, kind of looking sideways for the Dow and S&P to have a blow off day going to the upside, like a 3% move or something like that, and that will bring out my pessimism about the Dow and the S&P. I'll be ready to go bearish on those markets. Okay, now let's see. Moving on. Now, this is a monthly view of the dollar. Here is the candlestick that started the trend in August of 2011. This was the bottom for the dollar. So the dollar has essentially been moving. The low for the dollar was in 2011, and this was the high I discussed earlier, December of 2017. That was the high, and we've been going down ever since then. Okay, let's look at gold. Gold's high was in 2011. Now they're not exact. I believe the dollar started rising in August of 2011, and gold started falling in September. So it's not exactly on the day. It can be a little off, but there's a little lag, but not much. Now, the thing that interests me on this chart, let's see, gold fell until December of 2015. So that was that 2 years and 1 month. And so ever since, for the last 2 years and 1 month, gold has been rising. But gold retraced to this line here, 61.8 from 100. So that would be a 38% retrace on my Fibonacci tool here. And gold has not been able to cross above that critical point. You see here it went to the 38% line. You see on the stochastic down at the bottom, it went into an overbought state. Gold dropped, and then it charged up towards the same area, and we are approaching overbought again. So this is what everyone's looking to see, if gold is going to be able to push higher than this, because if gold does push higher, then the next level is here. Or even some bearish people would probably still hold out for 50% retrace. I don't know. I think for me, if gold pushes above this value right here, I'm gonna have serious reservations about my position that um, that gold is going south. That's gonna be tough for me to continue to think that. I think I might really just go neutral and confused for a minute and hold out. But for now, these two oversold, this overbought state and this near overbought state makes me hold on to my thesis that gold is going to crash. We'll see how that goes. Let's see. Now I want to get into some comparisons. Let's see. I want to compare. I want to show you how these things look side by side. I want to get rid of a candlestick. Go to a line chart instead. Okay, let's take a peek at gold since that's what we were talking about. Okay, what we have here is 2011 where gold, where the dollar started to rise, and you see this little lag I was talking about, where gold started to fall. Trying to get these to start about the same. Now, look kind of like a mirror of one another. Now, I'm taking the view that this bottom line here is gold. The white is gold. My view is gold's gonna dive. This stochastic down here in the bottom is for the dollar part of the trend. Let's see. Let me take a look at it on a 9-day chart. There you go. Yeah, I like to get those squiggles out of there. Sometimes the monthly chart is not enough information. Where a daily chart might be too much information for like the stochastics. And I don't like to edit the stochastic graph because because then I'll forget that it's been edited and I'll start using it for other things and I'll lose track of the fact that I'm not in the default settings and it'll start giving me all these false cues. So I instead just change my time frames. Um, let's see. So now we're looking at a 9-day view of gold versus the dollar. Looks kind of like a mirror. That's really on the point of this part is just to show you how they look almost a mirror of one another, mirror image of one another. Let's see. Now I want to try. I'm going to look at something else real quick. I'm going to look at the euro. And this is even closer. I don't know if you guys remember this was years back when the dollar was diving before it reached its bottom in 2011. Hollywood actors were they were putting in their contracts when they did movies that they didn't want to be paid in US dollars. They wanted to be paid in euros. you know, that was when the euro was high. But when the dollar started rising in 2011, look what happened to the euro. You haven't heard any more stories about actors asking to be paid in euros. Okay. Again, this oscillator here, this stochastic is for the dollar. I think the dollar goes higher. I think we fall in the euro. We'll see how that goes. Again, if the gold goes higher and the dollar keeps falling, I'm going to have to change my thesis. That would be a major forecast revision to my macro thesis. That would be a tough pill for me to have to change my total view. But this is a Bitcoin versus the dollar. The Bitcoin is so parabolic that it's throwing off any kind of comparison chart. So this is of no real value to us. So I'm going to skip that part and I'm going to close this out now and just keep your eye on the dollar. The dollar is the king of the global market. You'll have basically an earthquake in the daggone in all of the markets. When gold turns north, you're gonna see money rotate. It's gonna get out of gold. It's gonna shift. It's gonna called the domino effect, and it'll be over. The markets will adjust to it, but you will know why. You will know why. And again, don't let all of this crypto talk turn your attention away from the Dow and S&P. I'm going to do another chart this weekend about the Dow and S&P because we're very near the top of this downturn, severe correction, if you will. We cannot afford to not pay attention to that. The Dow, I'm sorry, the S&P, something very strange happened this week, and that is the volatility index moved in the same direction as the S&P. The volatility index moves the opposite direction. It's supposed to move the opposite direction. Now, there are sometimes it moves in the same direction, but that's very, very rare, and we've had it happen a lot in recent times. So what that means is, although the market is going higher, people are buying put options. That's a bet against the stock market. They're betting against the market at the same time that the price is going higher. That's that's extremely odd. That's extremely odd behavior. So that's we're gonna look at some charts to see if we can see what's going on with that. We're gonna take a look at some volume and some other in some other options, some leveraged ETFs, which is really basically puts and calls, purchases of puts and calls, and we're gonna see if we can get some clarity on what's going on with the S&P and the Dow, because that's the one that's going to affect the most people if it starts to fall, because it's just too many retirement accounts assigned to that symbol. So that's all for now. Stay tuned for the next chart. It should be up. If not, I would say, you know what, I don't want to say. I will say it will be up before Sunday noon. Okay, I'll commit to that. At the latest around noon on Sunday, I'll have a S&P Dow Jones chart up. Thank you.